Hey, what's going on, guys? Blood Phantom 81 here. Today, I'll be talking about an investment that I'm very, very excited about. And it's actually rare that I get excited about a new investment, so I thought I'd share it with you guys. It's something I thought about as of Saturday, and as of today, August 27th, I am now invested in it through M1 Finance. So I'll talk about that in a second. I'll walk through my M1 Finance portfolio. But I'll just go ahead and say it. This new investment that I'm talking about is gold. And so I know that gold might catch a lot of people by surprise. It's definitely not on a lot of people's watch list. It's not a company. It doesn't have a PE ratio, and so it's kind of under the radar for a lot of good reasons. So I'll talk about some of the public sentiment around gold, but I'll also talk about why I'm investing in gold. So yeah, let's talk about some of the public sentiment and ideas about it. So one of the biggest question marks is why gold has any value at all. It's basically a metal, a precious metal. So I think the most popular idea about gold is that it's some kind of currency. So whether it itself has inherent value and adds value to countries that own it, such as China and Russia and the United States, or whether it's a hedge against a lot of fiat currencies, which actually has some merit to it. So, for example, gold is actually inversely correlated with the US dollar. So, for extended periods of time, if the US dollar goes down, gold will go up, and vice versa. So, that's an inverse correlation. So, in a sense, it's a hedge against fiat currency. So, people betting that the US dollar will at some point collapse, or maybe that the US dollar is weakening because of inflation, things like that. So gold is kind of a currency in that sense, which has some merit to it. But let's talk about another notion. So maybe people think that gold has some actual utility value. So gold actually has really good semiconductor properties and other properties that only gold and silver have, especially in manufacturing and materials. So does gold itself actually have value that's inherent and you don't have to add anything to gold? But does it actually have some kind of properties useful for manufacturing? That's another perceived notion. And the last perceived notion is that gold is just kind of there to sit and look pretty. So people wear gold around their necks, and it's kind of jewelry, and it's definitely a luxurious item. Gold plated this, gold plated that. So it has some kind of aesthetic value, I suppose. So yeah, those are some of the perceived notions about gold and why it has value. I'm not actually investing because of either of those things. The reason why I'm investing in gold is because I treat gold the same way I treat the stock market. And the stock market is driven by supply and demand, aka buyers and sellers. So right now, I feel like gold is oversold, and I feel like it's due for a bounce for some reasons, which I'll talk about later. But I think overall, in its core, it's driven by buying and selling contracts, usually by managed money. So whether it's by fund managers or other types of financial institutions actually buying gold, that's why it moves up or down, is because people are literally buying and selling gold contracts. So it is kind of like a stock. So first I'll do a brief overview about gold. Let me go ahead and make myself a little smaller so you guys can see. And basically give a brief overview about it. So gold has been pretty much in the bull market ever since 2002. So from 2002 to 2011, it was in a very strong market. But keep in mind that a lot of times people will tell you that gold is a hedge against the US stock market, but that's just not true. It also experiences bear markets when the US stock market does. So from 2008 to 2009, we saw a pretty significant retracement. And we saw the same thing around the 2000 recession as well. But for the most part, excluding those times, gold has been in a pretty strong bull market up until 2011. So from 2011 to 2015, gold was in an extended bear market, in which we saw prices depressed by maybe over 50%. So pretty significant drop. Let's go ahead and zoom in a little bit. So on the weekly time frame, we see that the 50 crossed below the 200, and clearly price has been depressed, and clearly the trend was down. So price action was hitting the 50 week moving average over and over and over again, never exactly closing above it. Until now, until recently, we got a bullish cross, but I'll go ahead and go over that in a second. But the question right now is, this time period, which started in 2016, we saw a really impulsive move and a retracement. Is this the start of a new impulsive wave? In which case, this entire thing would be a wave 1, this entire thing would be a wave 2, and we would just be setting up for a wave 3. So let me go ahead and throw on some fib targets. I can't actually see where the zero starts, but I'm just going to ballpark it. So gold retraced to about 50% of its entire value. So the question is this the start of a new impulsive wave? In my honest opinion, if we hold this level, I think the answer is yes, and I'm willing to take that bet. First, I want to show you guys something pretty interesting. So this is gold net speculative positions. So this is, because this is net, that means that's long contracts minus, or long contracts plus short contracts. So this is how people are positioned, and more specifically, this is managed money. So this type of position is typically wrong. So when managed money is negative, that's usually good, and when managed money is very positive, that's usually very bad. That would mean that stock prices will go down, especially after times of very long contracts. So for example, this time period, which was around, let's say, around August, July 2016, that was actually the peak right here. So this was the summer of 2016. So managed money was very long, and we saw a plummet thereafter. This time period that I'm looking at right now, which is now, is literally the most negative that managed money has ever been, especially, well, I guess in the last 5 years. So we literally have never been negative. So that's something that stuck out to me. On top of that, weekly RSI got oversold. That doesn't mean that we're going to see a bounce. We could very well make a lower low. But again, the probabilities are there. Weekly RSI is oversold. Daily RSI clearly got oversold. And let's go ahead and take a look at a monthly time frame. So monthly time frame is still not oversold yet, but we're still holding up this 200 period moving average support. Currently making some kind of bull hammer, but I'll go over those reasons why in a second, why I'm buying gold. But the idea here is that it's kind of a risk to reward ratio here, and that's the setup that I'm talking about. So the low that I'm watching out for is this low right here. So basically, I have a few $100s of error and that I'm putting at risk, and if we break below this low, then I would consider leaving my positions, and I would feel like we were just going to plummet and head lower. But until then, I'm going to go ahead and buy gold mining stocks. So let's go ahead and take a look at some of the positions that I own. As you guys can see, I own a few different accounts. So today I transferred $150 to my experimental account, and here I have my gold miners portfolio. Let me go ahead and move out. So these are some of the gold mining stocks that I own. Essentially, I wanted to get stocks that kind of mimicked the index fund of gold miners, which is GDX and GDXJ. So a lot of these are actually in GDX and GDXJ. But the risk to reward ratio really enticed me. So let's go ahead and take a look at one of them, which is AUY. So this is an example of what I'm talking about. So AUY. Let's go ahead and remember how gold responded throughout this time period as well. So from 2007 to 2008, there was a recession in gold in the stock markets, and this stock was no exception. So lost most of its value. And then from 2007 to 2011, which was the bull market, AUY went from $3 all the way up to around $20. Currently, the low that we made was back to around $2, so close to $1 actually. And then in 2016, which was the recovery, from 2016 to the summer of 2016, AUY went from around $2 flat to $5.68. So around 2.5x times its value. So right now we're currently sitting above this low right here. So that's what I'm watching out for. I'm watching out for the potential of a 4x, 5x, 6x gain. Compare that to something like GDX, which is actually the gold miners index, which definitely doesn't have the same risk to reward setup, but still, this is kind of the performance that I would expect a lot of gold mining stocks to follow. The same goes for GDX, which is gold miner seniors, and GDXJ, which is gold miner juniors. So those are the kind of stocks that I got into. All right, so let's take a look at another stock. So another stock is SVM, which I have pulled up here. So again, from some period of time all the way up to 2011, SVM saw a really significant increase, and then there was this huge bear market from there up until the start of 2016, where it hit around 53 cents. So it went from 53 cents all the way back up to around $4, and now we're currently sitting at around 273. So again, another stock with about 3x, 4x, 5x, 6x potential once gold starts picking up again. And that's the thing, is that gold has to start picking up again. And this is why I'm not necessarily like screaming out and telling everybody to buy gold. This is kind of my gambling portfolio. So as you guys can see, it is experimental. I'm not planning on putting that much money into it. I'll probably do maybe, I don't know, $15 a week, maybe $5 on Monday, $5 on Wednesday, and then $5 on Friday. That's kind of the system that I'm going to be going with. But like I said, a lot of these gold mining stocks have a ton of potential, and the low that I'm watching out for is the low of the start or the end of 2015. So if we break that low in gold, then I'm totally wrong on it, most likely. But until then, I'm going to do what I do and do calculated gambles. So yeah, I don't want this video to get too long. I'm actually going to link my gold miners portfolio in the description box below. Let me know what you guys think of it. I'm pretty sure it's not that popular of an idea, but I don't care. But that's just something I'm excited about right now. So anyway, I hope you have a great day and good luck trading, guys.